Divergence is a disagreement between price action and the window indicator. So what divergence does is to send us a signal that either we are at the end of a pullback or a reversal is in view. But that does not mean because you spot divergence, it will play out immediately. So the escape route from divergence failure is for you to understand where the divergence is formed, avoid rushing, making entry too early when it comes to divergence. That means have adequate knowledge of candlestick formation in order for you to trade divergence. Welcome to Royal Academy. Thank you to all our new subscribers. We so much appreciate your support, your love. To all our returning subscribers, we want to say thank you and God bless you. Someone asked in the comment of the previous video that his challenge is how to find entry. And in that video, we've talked a little about how to find entry. So in this particular video, we want to look at how to find entry and how we can avoid false entry, which is the failure of our divergence. So first thing I want you to do is always trade divergence in the direction of the trend. What I'm trying to say in essence is that, for example, if you look at the overall market structure on this H1 time frame, you will agree with me that this is a downtrend because price is making, this is a high and this is a low and this is a lower high, this is a lower low, a lower high and a lower low, a lower high. So price is making a series of a lower high and a lower low. So if you connect your trend line, you realize that based on this H1, you are in a downtrend. So one of the ways to avoid order block failure is for you to trade it as a continuation pattern. Trade it as a continuation pattern. Okay? So let's look at this particular scenario. You are trading as a continuation pattern and then let your divergence be formed around support and resistance, your order block zone, your supply and demand zone, or maybe in your smart money cube or the area of fair value gap. Now, if you don't understand what a smart money cube is, order block is, or a fair value gap is, support and resistance is, you can drop it in the comment of this video asking me to explain or make a video to explain or how to trade each of those things I just highlighted. But for now, let's focus on our divergence. Now, price has moved to this downside, right? So price moved from here and it has given us a new lower low. So now look at what happened. When price pulled back to our trend line, we are expected to have an entry. So this entry becomes more valid because there is a divergence. Look at this, right? You see the hairline. So which means that here and then you see this wick. But look at our indicator window. We have this. So instead of this to give us a higher high, this gave us a lower high. So in this direction of the trend, we are having something like this. While here we have something like this. So this is a disagreement, and this now is happening along our trend line. So because it's happening at the trend line zone, and is spotting a divergence, it becomes a valid entry. So what do you need? This now tell you that this pullback has come to an end. So you now need a candlestick pattern to tell you what exactly to do. And look at here, price now got rejected, gave you a bearish candlestick formation, then with another follow up bearish candlestick formation. So once you get this and this particular follow up candle, this first one and this follow up candle in form of an evening star formation, you will dive in and make your entry immediately. So it means that your entry here becomes your entry, your stop loss is here, and then you can see how it plays out massively. So this is one way you can trade divergence. Very much simple and straightforward. So in this zone again, we are having equal high. This is our equal high, and look at what this is doing. This is giving us a higher high, and it's happening around this zone. And afterward, what do we have? We have a bearish pin bar. Forget about the color. This is a bearish pin bar candlestick formation. And after this, you can see this rejection and these rejections and price. So this is how you can take advantage of this. You trade it in the direction of the trend. Now, if you spot it for a reversal in the sense that, look at this is H4 time frame, and this price has been bullish, price has been buying, and you spot a divergence. Now you are anticipating a reversal in this particular scenario. You need to follow carefully in this scenario because this divergence is very logical and tiny. Look at this. This last bullish candle now is what I want to place this cross line on. Okay, let me make it a bit bolder so we can see how clear it is. Great. Right, look at this bullish candle. This is a divergence. Look at this previous high. Look at it here. So here we have a divergence. So you need to train your eye to be able to spot this divergence. Okay, so this is a divergence. Now, this divergence we spot it's for a reversal, which means change of price direction. So if you look at this critically, what this tells us is that in this price scenario, we were having here a higher high, and here is a new higher high, right? So which means we have a structural point at this zone. So look at what happened. Price now came and break structure in that zone. So I will now mark the area of that break of structure. So structure was broken. So immediately the structure was broken in that zone, you are not making an entry. You move to your H1 because structure have been broken. You want to make entry on a lower time frame. So here is our lower time frame, and this is the structural point that was broken because this is a higher high and this is a higher high. So this is the structural point that was broken, right, from H4. So the next thing that will happen now is that you will now mark your order block. So this is your order block. So if you mark your order block, so you are expecting price to pull back into your order block and then continue the sell because there's already a break of structure. And then you can as well pick up your Fibonacci retracement tool and mark out this zone. Now please take note, if you don't know what a Fibonacci retracement tool is, drop in the comment section asking me to make a video about Fibonacci and I'll do justice to that. So you can see now I have placed my Fibonacci retracement tool and look at what happened. Here price now, after breaking the structure, price pulled back to 78.5 OTE, which is optimum trade entry of my Fibonacci tool. Pull back there, gave us a rejection. You can see the rejection, those candlestick pattern, and price sold to the downside. You can see that. So now we have established a break of structure. Then you can now continue with the previous way we explained earlier of trading divergence continuation pattern. So now the price is now going a structural way. All you need to do is you now mark the next one and wait for price to do its things. Look at here again, price pull back to 78.5 of your Fibonacci and then see how massive it sold down. And then we keep moving it. Here again, look at it again, price pull to 78.5 and you can see how it is selling. So for your divergence to be valid, it needs to be either an area of support, resistance, supply and demand, order block, or a fair value gap zone, or a trend line zone, because trend line is an area of dynamic support and resistance. So trend line is a dynamic support and resistance, so you must know that. And what that implies is this. For instance, if you look at this particular scenario, price has been going down. You can see this. If I connect my trend line, great. So you see, if I am trading it as a channel, this is an area of resistance, of support, I beg your pardon. If I am to trade this particular trade now, if I am to create a channel for it, why? Because when price hit it here, it will go up. Price hit it here, it went back. Price hit it here, it went back. So this is my dynamic area of support and resistance. So what now happened? Price gave me a divergence. Look at this. You can see this low. So here is my divergence. I have this, so this is divergence. And then I now make my entry based on this candlestick formation. And I bought to the upside and then I'm still selling again. Okay, so this is how simple you can take advantage of this. Though this time this video to be long. Thank you for watching. Please do not forget to give a video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video.